let's get into this. So it's Tuesday. It's literally the second trading day of March, and war headlines are everywhere. Energy shocks are trending, and safe haven flows are booming. And somehow, someone forgot to invite the yen to the party because the fact that the yen is still weakening. And if that sounds confusing, welcome to the markets in 2026. So the Japanese yen is hovering around 157. Bitcoin is swinging somewhere in the mid $60,000 range. And the Dow is quietly bleeding lower as geopolitical tension and inflation anxiety all collide at once. So this isn't random volatility. This is macro stress playing out in real time. For those of you who've never attended a session with me before, good morning. My name is Francois. I'm your market analyst here at ATFX Africa. And today we are breaking down the Ninja, aka USD JPY, Bitcoin, and US 30, also known as the Dow Jones Industrial Index. Three markets where safe haven flows, policy risk, and sentiment shifts are driving price action as we move deeper into March. Now, again, these are the three instruments that I'm going to be looking at today, but if you want me to look at anything else, please just ask. That is what I am here for today. Okay, so let's kick things off with currencies. USD JPY is trading around 157.5 with the yen hovering near multi-month lows or at multi-month weakness levels, if you want to put it in such a way. But here's the twist. Normally, during geopolitical expectations, the yen benefits from safe haven flows. Why? Because the Japanese yen is a safe haven currency. Remember, Swiss franc and the JPY are safe haven currencies. So they normally benefit from this safe haven flow. But as I said, someone forgot to invite the yen to the party because this time rising energy prices are hurting Japan more than helping it. So Japan relies heavily on energy imports, and with the Middle East tension escalating, rising oil costs are pressuring the economy. So the yen has dropped nearly 1% in the previous session and continues to trade under a significant amount of pressure. Their finance minister has also stated that intervention remains an option and that authorities are monitoring markets with a strong sense of urgency. And that language matters. Why? Because it suggests policymakers are uncomfortable with the speed of the yen's weakness. Meanwhile, Japan faces sluggish growth, persistent inflation, and a complicated path for the Bank of Japan. So the deputy governor of the Bank of Japan confirmed that rate hikes will continue, but without a timeline. So in simple terms, the dollar is benefiting from safe haven demand and inflation pressure, while the yen is struggling under energy costs and policy uncertainty. And that's why this pair is climbing even in risk-off environments. So with that being said, let's have a quick look at the charts here today. So some key levels. Resistance obviously sitting relatively square here at 157.7, followed by these highs up here at 159.4. Then we have our support quite firmly at 156. This is quite a psychological level. So that would be a little bit of a change in sentiment. And then we have lower support at 154.5. Now, this pair is testing upper boundaries again. Now, you can see the last time we were here was in the beginning of February. So literally basically a month ago. Okay, in 3 days, it would have been a month ago. We were in this exact same position where we are right now. Momentum favors the upside for now, but the mention of intervention adds a layer of caution. So If officials step in verbally or otherwise, volatility could spike quickly. So right now, USD JPY is riding a strong dollar wave, but the water is choppy. Okay, so don't get caught on the wrong side. Traders, if you do have any questions for me here, please ask. I am happy to help. I am happy to assist. This entire session, as I stated, it's for you. So it's for you to interact with me as well. Again, you'll see there is a Q&A session or section as well as a chat section. You can use either one of the two to send me a message. Next up for today is Bitcoin. So our primary cryptocurrency is kind of going nowhere slowly. Yeah, it's the only way I can put this. So Bitcoin is currently trading at $67 now, down more than 1% on the sessions. Over the last 4 weeks, BTC is down over 6%. Over the last 12 months, it's down 21, almost 22%. And this kind of leaves all of us asking what's happening. Bitcoin is caught between two narratives. First one, risk of pressure from geopolitical escalation. So the persistent volatility that prevents it from acting as a traditional safe haven. So yes, there's always been talks that Bitcoin is a safe haven asset. Okay. But during times of geopolitics, during times of war, people go where they feel safe. People go where they feel comfortable. People go where it's familiar. We haven't experienced anything familiar here just yet. So, following the recent US-Iran strikes US-Israel strikes on Iran, Bitcoin initially dropped towards $63 a coin before stabilizing now in that mid to high 60 range. Now, this reinforces one key point. Bitcoin is not behaving like gold. It's behaving more like a high beta risk asset. So currently we are seeing markets pricing in war risk, inflation uncertainty, and liquidity concerns. That's feeding into crypto volatility. Now, when we take all of that and we have a look at our charts at the moment, we can see Bitcoin is currently stuck range bound, and it has been stuck range bound for the last month. Now, for all my intraday traders, this has been a dream. Because again, you can trade from the highs, trade from the lows, trade from the highs, trade from the lows, trade from the highs, trade from the lows, and just kind of continue on that pattern. So support is currently sitting here where we are right now, which is around that $76,000 level. And that's kind of where it's stuck at the moment. And then we have lower support here at $58,000. Now, resistance is in the top of the range here around $71,000, followed by that very high $79,000 level. Now, when we do look at this, we can see a triangle-like formation. I didn't draw it in because it's not the most pretty, but we can see there's a slight triangle-like formation forming there. Now, with this structure, short-term bias is leaning slightly bearish. I mean, even here on the 4-hour time frame, we properly overbought here at the moment, so we can expect some downturn similar to what we did a few times here. So if price breaks below the mid 70s, so basically that 67 support where we are at the moment, the correction could deepen slightly, but if it clears that 71,000 region, momentum could shift. So right now, Bitcoin is a headline pivot environment, reacting more to macro shock than internal crypto flows. I hope that makes sense. Again, traders, if there's any questions, anything I can assist with, anything that you want me to look at, please pop it for me in the comment section, pop it for me in the chat section. Let's talk about it. But otherwise, we are going to finish things off today with equities. So the Dow is trading around 48,550. At the moment, actually down a little bit lower. So this is actually the price I had that I checked before I walked into the studio. Currently trading now at 48,200. Now, 200 means we are down over 1% on the session so far. And yesterday it closed slightly lower at like 0.12%, if I remember correctly. Over the last 4 weeks, US 30 is down nearly 2%. Over the last 12 months, it remains up more than 14%. But the short-term tone here is cautious. Geopolitical escalations in the Middle East is adding stress to global markets. So rising energy prices and inflation fears complicate the Federal Reserve's path forward. Now, on Friday, hotter than expected inflation data, this was the PPI report, already complicated rate cut expectations. Now, add war risk, and that's a double headwind. So, sector performance reflects this. Defensive names like Chevron gained. Cyclical names like Home Depot and 3M led losses. So markets are rotating defensively rather than aggressively selling. But sentiment is clearly fragile. So when we have a look at our charts, we can first look at a little bit of the setup that we discussed last week. We broke out last week. We said if it comes back for a retest and breaks back out again, that will give us a nice little sell. It did do so by Friday, and obviously this morning so far it's just dropped from that lower entry. So that was a relatively good setup. Now at the moment, support is sitting here at these low points here at around 48,000 flat. Okay. You can see there was some previous turning points back here as well. And that is followed by the one down here at 47,000. So resistance is and has been for quite some time quite strong here at 49,400 and has been a really good level to trade from off. And then we have the higher resistance that's up at the all-time high at 50,500. So momentum indicators are skewed towards neutral to bearish on some of the shorter time frames. Now, with that being said, the Dow is not collapsing right now, but it's not breaking out either. It's, how do I put this? Correcting within a cautious macro backdrop. So, traders, as we are heading into this second trading day for the month and for the week, three drivers are currently dominating. Middle East developments. Okay, so escalation or de-escalation will immediately impact safe haven flows, energy pricing, equity sentiment, and US dollar strength. Then the second headline we need to have a look at, which is the Bank of Japan commentary. Anything from the Bank of Japan's governor, any remarks could influence yen volatility, especially with intervention talks intensifying. And then lastly, risk appetite in equities. So watch for sector rotation. If defensive stocks continue outperforming, risk off remains dominant. But markets right now are trading headlines faster than data. So the real question we need to answer here is, does volatility expand or does liquidity step in to stabilize sentiment? Now, that answer might define the rest of the week for us. So, traders, if there is anything that you still want me to have a look at, please let me know. Otherwise, we will be having a live NFP on Friday. So please do remember to join me for that, where I will be analyzing and going through the market live as it happens, providing setups. So that would be at 3:15 on Friday. So please join me for that. Other than that, I think that wraps up our daily market brief for today, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you want to go and experience the difference for yourself, go experience the ATFX difference for yourself. Just head over to atfx.com. Traders, until next time, stay sharp, stay focused, and trade smart.